Hello everyone, it's Paris here from Traderstock again. We're gonna do a recap of what happened last week and what might happen again next week. Let's start with the daily S&P, and we're gonna start elaborating a little bit on the interest rate Fed decision. Now, this is the Wednesday, 2nd of November. That was the rate decision. Let's talk a little bit technically first. This is a daily S&P. We were discussing, I think last Sunday, so on last Sunday, on Friday, that was the last candle, so we have 1, 2, 3, 4, 5 candles. Now, I did say on the upside we had the upward channel, which is not here anymore because it doesn't look like it's going to go up anymore, at least in the very short term. And I did discuss that the first level of support was the 3,900, which actually didn't serve as support pretty much, and the broken high connection. The market did eventually go one day prior to the FOMC to the low connection. It went almost exactly and retraced 30 points, then it broke for a few points, but overall the level held it, at least on the first time. The second day it was hovering around there, then FOMC came and broke almost everything to the downside. Now, let's speak a little bit about the FOMC. The FOMC had a bullish statement in the beginning where people thought that they're gonna hike a lot less or they might stop hiking. And I said might do a mini pivot because the Bank of Canada, Bank of Australia and back, but then I discussed on a subsequent video that Powell keeps on saying that we're here to fight inflation. I do not understand why people think that Powell is gonna stop hiking. Powell will keep on rising rates, and he said explicitly in his press conference that we will keep on rising rates until inflation goes down. Now, it doesn't look like inflation is going down, especially from the latest Eurozone CPI inflation, and from what you see in the street prices. We still have price pressures, maybe a little bit less than we had in March, but there are still massive price pressures, and until now, the rate hikes haven't really done much to stop inflation rising. It makes sense because rate hikes are a bit they lag until they come into effect in the economy. But what is not lagging is the mortgage rates. The mortgage rates in the US are around 7.5%. This is huge. So it's normal by now that the house prices are declining and the home sales are declining and the existing home sales are declining. It makes sense. Let's see for how long this is gonna last. Every week looks like totally different week from the last one. Now, let's talk technically. So this is the daily chart. We are still back inside the range. Nothing much is happening. I told you when we get back into the range, then we are standing in no man's land, and there is not much to do. And this is translated from the volumes. You are telling me that on any other day between, let's say in September, we had 2.5 to 3 million volume per day on the S&P, and then on FOMC that was a very choppy webinar, a very choppy session. We only did 2,000. Now understand, this is coming from Traders Paris again. Banks and hedge funds are closing their books at the end of the year. At the end of the year, usually they do it at the end of November. So expect from now on volume to be declining as people are closing their books. Let's talk a bit on the upside. S&P again. This high connection serves again, even that it broke, serves again as resist. It's pretty important. Now we do have the 50-day moving average again at 3,820, and we have the high connection again. I repeat, it still serves as resistance. On the upside, obviously we have those levels, and then I'm gonna redraw another channel since we have a new candle formation. On the downside, I don't know what to say. On the day that we are gonna close below this line, let me just do it, we have to close below those lows. The market, in order to get some traction, it has to close below these lows. Otherwise, we are standing in no man's land. let's look at the bonds. I'm gonna especially focus on in the 2-year chart. So this is the US 2-year bond. That was on Wednesday. That's on Wednesday. As you can see, we broke the previous lows, and we went further south. I think the rate, the 2-year rate, reached around very close to 5%. Yeah, and on Friday we retraced. Now Friday was a little bit weird day for me because so the euro dollar rising for no apparent reason. There were some were there any figures? It was NFP. So NFP were higher, and because the unemployment rate was 0.1% higher, you know, everyone went. But still, it wasn't. It still was inflationary. So we had higher NFP, and the unemployment rate just ticked by 0.1, which is expected. People are starting to lay off. But that was a very contradictory. That was a very contradictory session. As you can see here in the 5 minutes, we went up, down, and again we closed like, let's say, mid-range. So uneventful. What surprises me is the euro dollar, which went massively up again. So it gave back all the gains from the FOMC session. And what surprised me even more, I'm going to repeat it again this Sunday, is the DAX. The DAX for me, yeah, okay, we do have very low interest rates in Europe. I still don't understand. It feels like there's so much liquidity in the world. They do not want to buy US equities, and everyone is just going into the European equities, which kind of makes sense because we have very low interest rates in Europe. But wow, just wow in the DAX. So it's better if you want to trade, don't look at anything, don't read at anything, just do what the market is telling you. So you're telling me how you're going to trade Europe? That we have a war, we have inflation. The DAX has been going up since. So the DAX low on the Monday, 3rd of October was 11,829, and today we're almost 2,000 points higher. So, as I say, expect everything and nothing, especially in the nothing part. Read, but do not create opinions. Opinions kill. There is nothing much more to add. That was a pretty boring week until the FOMC came. Then we had Thursday, which nothing really much happened again on a daily basis. Let's watch again the daily S&P. So that was Thursday. Sorry, that was Wednesday. That was Thursday. A little bit smaller range, and then Wednesday, and then Friday we ticked up again because on FP. I can say very clearly, I have no clue what's going on here technically. I see lows, higher lows, higher lows. I see here a small problem. We didn't manage to go up, and the problem is the Nasdaq. Let's go to Nasdaq. Nasdaq is rate intensive. Look where the Dow is, look where Nasdaq is. Nasdaq is having issues because of higher rates, and it will continue having issues until rates go down. Again, let's watch the Nasdaq chart. From here to here, let me just put lines. So, what do I always say? From here, come on, to here, let's take this out. We are in no man's land. Expect real trading to begin above those levels or below those levels. Or maybe even better, a close below where my cursor is currently standing. As you can see, there is not a daily close at this point where my cursor is currently standing. As you can see, we ticked exactly there. We tried to close below, we didn't make it, and on Friday as well we ticked below, we couldn't make it, and again we closed below. So in other terms, excluding the FOMC, that was quite a boring week. Now expect things, again, this is an opinion, but expect as we go closer into the year end, volume to drop, moves to be huge for no reason and without any volume, That's what you get if you start trading in December. So, but let's stop with those speculations. Again, what really stands, and I'm surprised, is the euro dollar. Now, are they expecting for the US to fuck it up and Europe to have, so they're expecting the US to fuck it up with higher rates, yeah, and eventually what, they're gonna do rate pause? I don't know. Is the euro dollar going up because of year end? I don't know, but it's still quite a strong move for an NFP Friday, with NFP being higher than expected. Again, we live in volatile times, we live in, oh, and something else I want to show is the VIX. This is the VIX future. In other words, it measures the volatility of the S&P. How in the hell we are at 25? So basically things are calming down. Nobody knows what to do yet. Nothing has brought, we have raised interest rates. Understand that traders act and react when something breaks. What has broken? Yet nothing. I don't hear anything. I see the Dow at massive levels, at massive high levels. Let's see at the Dow. Nothing is breaking. Nothing is breaking, so the VIX is going down. This is not good for us, than that we want volatility and we want some action in day trading. It means that anything below 27 in VIX or below 28 and even below 29. So let's say between 26, anything below 29 is good volatility. Anything below 28 is, it gets a little bit boring. And the elephant is the room are the commodities again. Oil, gold, silver, natural gas, all started spiking. This is the oil. The oil closed above this level. Expect some upside. Let's see where the range stands. The range stands, the top of the range are 96. So expect the 96 if on a weekly, I say weekly in oil. Weekly is very important. If on a weekly basis we close above 96 and expect some things to start. So if we go above 100, things are going to get very, very tricky again. Okay, I think I pretty much covered everything. Again, it was an uneventful week. We are standing in no man's land, inside the range. Let's see what the next week is going to bring. Again, with trading, each day is different. Each day is different. Okay, thank you very much. I will see you for the weekly recap next Sunday. For those that are attending the webinar, I will see you tomorrow at 3:15 German time. Thank you and good night.